what's your story, man? So you're a sophisticated real estate investor. You're out there doing deals. What kind of stuff do you invest in these days?
I don't know if I'm not going to call myself an expert real estate investor, man. I'm in the lane of learning and growing as much as everyone else. I love to get out there and network, shake hands, meet people. As you know, in real estate, so many different ways to skin a cat, so many different, shiny nickels out there, if you want to call it that, on how to invest. I start off, I'm sure probably how a lot of people might have started off, by doing a couple of fix and flips. I hated it. Will never do it again. Some people do it great, and hats off to you. But I realized, not only from a work level, but also from a portfolio level, it was not the kind of real estate that I was interested in. So I was like, all right, that nickel is not so shiny for me. It's really dull. So I got to find something else, right? And, through Fortune Builders, obviously learned more about rental property investing, turnkey property investing, and got to know you guys from them. And, it was an eye opener, but it was also a head scratcher. It's like, because I'm not in Florida, I'm not in Jacksonville. I'm like, my goodness, how does this work with me being up here in the Northeast and these guys managing the homes on the way? So, the conversation started. I got more familiar, started doing more research just in general on the topic of turnkey rental investment, right? And then once I started to get to know you guys, and we were saying it earlier, I think certainly you guys have many strengths. One of the strengths is that you are just in Jacksonville. I know you get questioned a lot. How come you guys don't replicate what you do in Tampa or Memphis or Orlando or something else like that? But I'm telling you right now, if you are a new investor, I think it's very comforting to know that JWB only manages homes in Jacksonville, because that means that they have their finger on the pulse of what's going on in the market. You guys are tied into the community. You've got the ears of the politicians. You're investing in the city, right? I can't think of many companies like yours that are investing in the city, in which they are buying homes, fixing them up, turning around and selling them to investors, and then from there managing them and whatnot. So I think that's very, very impressive. With my property manager at the time, so I started up, my wife and I, with JWB in 2018. So I have that, and then we'll go into the details on that, a little bit later. So if we draw a line down a sheet of paper, my portfolio of JWB homes is inside my retirement account. On the other side of that, in regards to how I keep the lights on a daily basis, I work with, like you mentioned earlier, the DeRosa Group, and we do syndications of large multifamily apartment complexes, and we target markets specifically in the Southeast. So right now we have a lot of our properties in North Carolina and in Kentucky. The head of the group, Matt Faircloth, got started 16 years ago with his wife, Liz, in DeRosa Group. They start off in New Jersey and then branched off. I think we number our deals. So there's been DeRosa Capital 1 through what we're actually raising for right now, 16. But DC 8 was the first large multifamily that they started with. That was a 198 unit apartment complex in Fayetteville, North Carolina. I joined DeRosa Group in 2019. So about a year after I started with JWB. And I met, Matt at a local RIA meeting. I was telling you, I like to go out and network. So I go out and I start meeting folks and shaking hands and whatnot. And I'm seeing him, he's kind of like, if you want to call him almost like a politician of the RIA meeting. He goes around and shakes people's hands and gets to know people and so on and so forth. So after, seeing him every time, for 5-6 months, we're at the holiday party, and he starts asking me, hey man, what's your long-term? What do you want to do? I was like, I want to get into large multifamily. I flipped a couple of homes. I hated it. I want to get into rentals. It's all about cash flows for me and so on and so forth. And they invited me to join the company, really to spearhead their acquisitions. I think that they were looking at properties all over the country. They knew that they needed the kind of hone down focus. What markets do we want to invest in? And, I had told them about my, Wall Street background, being a research analyst, being a salesperson. And, so I just started applying a lot of my skill set to that. All right, what markets do we want to invest in and why? And, the one I think common denominator, that the one understanding was we were not going to go into these so-called tier 1 primary cities like Atlanta, Dallas, Charlotte, Tampa, Phoenix, and so on and so forth, because we knew we couldn't compete there. We knew that the returns were compressing and so on and so forth. So we focused on the secondary markets, which is why we are in let's say Winston-Salem, North Carolina. We're in Lexington, Kentucky, the bourbon capital of the world. So it's been a lot of fun. Since I joined in 2019, we've done 6 deals. And, when you talk about large multifamily apartment complexes, 6 is a good number. I mean, that if you do 2 to 3 years a deal, 2 to 3 a year, it's pretty good. Now, obviously, that was through the pandemic as well and whatnot, which slowed things down, but then we picked it up again. So we just closed our largest deal that we had ever done 3 weeks ago, a 670 unit apartment complex spread between Winston-Salem and then we're in the midst of a deal right now. So it's been a lot of it. I've been learning like crazy. It's great because I get to keep one foot in regards to what's going on in the single family world, specifically in the Jacksonville market, because that's a big part of my portfolio. And then of course, what's going on in the multifamily world, where I would eventually like to go. And within DeRosa, if I had not gone through a career in Wall Street, I probably would have been a teacher. I love to teach, I love to educate. And so I want to develop an educational component inside DeRosa Group, and not for any crazy big fees, but just really to teach folks that are interested, really just the ABCs and the basics and how to get started. I think there's a lot of fear, there's a lot of misunderstanding. Real estate investing isn't really corralled, it's not structured. We don't learn it in the schools like we learn our other subjects as well, which I think is a major disadvantage. And so a lot of it is left up to existing investors and to ourselves to teach ourselves. And as we know, there's podcasts and videos and books and conferences, and there's coaching programs, right? And so on and so forth. So I would really I've done a little bit of it already. It's kind of what spurred me to do the Market Hunter. Not necessarily educational, but really it was educational for me because I get to learn about investing in other real estate markets. Folks talk to me about their different real estate strategies and so on and so forth. I implement some and I don't others, which is fine. I want to definitely get into the educational component of real estate, and even from there extending into the volunteering as well. So,
love that, dude.
Yeah, man, that's where I've been and where I am, and kind of like where I like to go to.
Here's your portfolio. You have these KPIs. Now you've invested in, all of yours have been in inside your retirement account, right?
Yes,
so
yes.
These lifetime returns that we're seeing are inside non-recourse financing, meaning that you're not getting the tax saving,
tax benefit, right?
Yeah, the tax benefit part of it, which inflates it as well. And this is again contained inside of it, compared to the property we were just looking at that has a 2.33% ROI
Right.
on that. This has been your return so far, 4.78%. You've been with JWB for a little under 4 years, right? Like 3.8 years.
Mm-hmm.
Lifetime net rental income in these 3.8 years of $48,581, and a lifetime total ROI so far of $58,820. How does that match up with your spreadsheet? I know that you were just referencing your own numbers and whatnot. How does that look in comparison?
Yeah, I think so. I don't track net rental income. I don't track lifetime return. I'm not gonna lie to you. I was telling you this before. I really don't care about lifetime return. I'm not a portfolio manager. You can't take lifetime return to the bank.
Okay.
Right.
So what do you care about?
But I appreciate that you guys put it there because it's nice to see. It's nice to see.
Yeah.
So I focus really on cash flow. What is my net cash flow on a monthly basis on all of my properties? And I focus on that based on the strategy that I use to go ahead and build out my portfolio at JWB, and how I can go ahead and continue to accelerate that cash flow. So those are the more important metrics for me. The lifetime total return, I haven't been able to dip into because it is in my retirement portfolio. It's nice to see lifetime net rental income, and I could probably only say to that figure that it's in the black, it's positive, right? So none of the properties are in the red, none of them are negative, which is outstanding, right? And that's, I think, the power of really working with you guys and how you guys manage properties and, put them together and so on and so forth, and, renting them out. So seriously, kudos. I'm just not, I'm not trying to blow smoke. It's that's kudos. I wouldn't have been able to do this by my damn self. Let's just.
Yeah. Cool, man. All right. So then here are the 5 profit centers, right? You've had a total net rental income of $48,541. You got a goose egg on the tax savings because you're in the non-recourse space, right? Like you already took those tax savings when you saved that thing off of your paycheck. Your total principal pay down. This is interesting, man. I can't believe that you've refied and bought 3 homes off of refis, and all your principal pay down is only $7,340.
Yeah.
Like that doesn't, that's interesting. And your total home appreciation in 3.8 years has been $268,000.
Wow. And that's over the 6 homes? Because I'm looking
that's over the 6 homes. So that is more than the price of this home that we were looking at today. That, by the way, is available if anybody wants to pick it up. Yes. We forgot to say that piece. Right. We've been selling out here like QVC style. Yeah, man. So in just 4 years, $268,000 worth of appreciation.
Yep.
Herve. Now, this is the secret sauce that GC likes to sprinkle in. First of all, thank you, Drew, for telling me that I'm supposed to compare these numbers right here and talk about like what really pops out, as in you've made $268,000 in home price appreciation, and the next biggest profit center was $48,000. So like the idea that investing in a high growth market with great home price appreciation long term, that's where the majority of your wealth comes from. And as long as it's not taking money out of your pocket, it's good. But GC goes as far as taking out the holding and closing costs and the selling costs to tell you what your total return would have been right now. And in your client portfolio, when you signed up as a client on these sheets, it would have said 4.1%. Your actual ROI has been 10.7% inside of your portfolio. And are they beating expectations? Yes. Right. So I don't know if you ever did that calculation. How does that look to you? Are you like,
I have not done that calculation, but that calculation looks very attractive. I'll take that. I will definitely take that. Not including the appreciation a lot, right? So very impressive.
I love it, man. I really appreciate doing this with you, dude. Thanks for being us. See you on Tuesday. Until then, be more like Herve. Don't be average.